we have two things that we need to cover here in this video. First and foremost, 3 reasons to own AMC stock. And that's pretty straightforward, and I think there's a lot of value out of you guys hearing that. But on top of that, I do have a brand new position that I did start today, and this stock could be a good buyout candidate. It's dropped dramatically. Like, this stock has gotten beaten into the ground. Its market cap is now under $1 billion. So there's that. It has a 25% short interest, so it could be a short squeeze candidate. Could get a buyout, short squeeze at the same time. Who knows? Or it could just be a good long-term growth stock. Now, this stock was actually brought to me by my girlfriend, right? She said, hey, I use this product. I like it. I said, hey, that's a stock. So usually when that kind of thing happens, you want to take notice what's going on around you, and usually those make for the best investment. So nonetheless, we're going to get into it. I hope you guys find value out of this video, and I hope we make some money on this trade. Not financial advice, not a recommendation. The stock could drop 50% or it could go up 100%. It's really your own risk to take if you want to. I'm going to show you guys my position on this trade because I did buy shares and I did buy an option, and I do plan on adding to this. Now, if you guys want this information, if you want to, get access to some of these trades that I am making, link down below in the pinned comment for the trading group. I send out all of these alerts in real time as soon as I make a trade, so you were alerted to this earlier in the day today. But I would like to keep making these kind of videos talking about other stocks as well that have a lot of potential, because after all, we are here to make money regardless of where the money is to be made. So if you guys want more videos like this, hit the like button, subscribe to the channel, and comment down below. Comment if you guys like these. If you don't, let me know your input. So I will either make more of these videos or I won't make more of these videos. But nonetheless, let's get to it. So this is the article that we are going to go over revolving around AMC stock, and it says 3 reasons to buy AMC. AMC Entertainment keeps surprising its critics. Here are 3 reasons why AMC stock is a buy, but we're actually going to go over this next. We're not going to start off with this. We're going to start off with the new trade that I just initiated today and why I like this, what the fundamental numbers really look like, and it's Fubotv. This stock has gotten absolutely destroyed at a high of $62.29 per share in 2020, now sitting at $5.85 per share. Now, we got a lot to get into, so let's just dive into it. We'll come back to where I think the stock could go in just a couple of minutes. But it says, Fubotv, the leading sports first live TV streaming platform, today announced its financial results for the 4th quarter and full year ended December 31st, 2021. The company also announced 2022 guidance, expecting to drive over $1 billion in total revenue this year. Fubotv delivered record annual revenue of $638 million total revenue in 2021, including $1 million impact from the December 2021 acquisition of Molotov. Excluding Molotov, Fubotv's total annual revenue was $637 million, an increase of 144% over 2020. The company closed 2021 with 1.13 million total paid subscribers, up 106% from the prior year. Fubotv added 185,000 net subscribers in the 4th quarter. And actually, my personal experience with this, I watched the latest episode of The Walking Dead, and besides just going over that, right, my experience with it, I actually like it. It's branded as mostly being about sports, which it does have a lot of sports, different programs on it, but it's also a full cable service, if you will. It's pretty much the same, where they have movies on there as well. They have a lot, and I think there's definitely a lot of opportunity to continue growing this business with the guys that like sports, right, or gals, and just an alternative to cable. I think there's a lot of potential here, and they only have about 1 million, little bit over 1 million total paid subscribers. Something like Disney Plus has 150 million paid subscribers. Last I checked, it might be closer to 200 million. So even if they can start to get, 3, 4, 5, 6, 10 million paid subscribers, this is going to be a multi-billion-dollar company. But what's the fundamental outlook for Fubotv? Well, it says Fubotv also released revenue and subscriber guidance for 2022, broken down by North America and rest of world, abbreviated ROW, including France and Spain. Within North America, the company forecasts first quarter 2022 revenue of $232 million to $237 million and full year 2022 revenue of $1.08 billion to $1.09 billion, which projects achieving the billion-dollar mark for the first time. North American subscribers are expected to reach 1.028 million to 1.033 million in the first quarter of 2022 and 1.50 million to 1.51 million for the full year. So really what I want to focus on for this next part is going to be that revenue number of, we'll just call it $1 billion. We'll be a little bit conservative under their actual guidance. So if you look at Fubo, what is the market cap here? It's $910 million. Wait, they're going to do $1 billion in revenue? They're not exactly making money, as you guys could probably imagine. They're still losing money. It's not all too bad. Some, this quarter right here, Q4 2020, not a great quarter, lost a lot of money, but they have not been losing all too much money right now. They are still in the aggressive growth phase. Obviously, they are expected to lose money, so you can't go off of price to earnings ratios to value Fubo. You have to go off of price to sales, and they have a less than 1% or 1. I'm stuck on percents. I've been trading all day, but 1 price to sales ratio. Now, it's actually a 0.9 price to sales ratio. And if you just type in, this is simple. What is a cheap price to sales ratio? From an investment perspective, a low price to sales ratio is 1.0 or less. And Fubo at 0.9 is under 1. So that is perceived as a low price to sales ratio. May indicate a good buy with a stock price that is undervalued. Higher price to sales ratios such as 2.0 to 3.0 display a strong market price and perhaps an equally strong company. So let's just go off of the price to sales ratio. If this thing went on the higher end, say to a 3 price to sales ratio, you're going to be sitting at $15, $16 per share, a little bit higher than that. Where is Fubo at right now? Well, it's at $5.87 per share. This thing has gotten absolutely destroyed, down 72% in a year. Now, was it overvalued here in the 30s? Obviously, it should have never been in the 30s. But to fall from the 30s down to the $5 range is simply too much, too fast for a business that is growing over 100% year over year and expected to continue to grow like that. And I've seen it's starting to be a little bit more talked about within your peers, right? That's what you want to see. You want to see something that gets adopted by your peers, and those make for really good investments. Let me give you an example. Apple, back in the day, 10, 15 years ago, when everybody started getting iPods, that was probably your sign that Apple was likely to be a good investment. If you seen the product, you liked the product, it was likely to be a good investment. And what did Apple turn out to be? A good investment. What about something like Crocs? Highly debatable, right? Not everybody likes Crocs, but you can't argue that it was a good investment if you caught that trend in 2017, 2018, 2019 when Crocs first started to become popular. That stock was trading $5, $6 per share, hit a high of $180 per share. That was a trend that you guys could have seen and really built on that. Let me give you another example. Yeti. I know you guys have seen motherfuckers with Yeti cups. I know you have. Don't say you haven't. Well, this stock went public October 25th, 2018 at $16.75 per share. I actually did own some Yeti, and I believe I do have a small position in Yeti, but I sold it for a big profit. You could have bought the stock for, $10, $20, $30 per share, and this thing hit a high of about $107 per share. Great investments. All of these were really first known about because people around you started to actually use the products. Now, if you don't know what Yeti is, if you don't know what Apple is by now, if you don't know what Crocs are by now, then you might be living under a rock and this might not necessarily apply to you. But usually when you see people around you starting to use a product, it's usually going to do well over the future. Not always. I'm sure there's a lot of adverse cases to that, but it's usually what happens. Now, my expectations for Fubo are something like this. I don't expect the stock to rally right away. I don't expect to see a short squeeze right away. I think there's a lot of opportunity for the long-term buy and hold of this company, but I think if you get a buyout bid, or if you do get obviously just the stock doing well or a short squeeze, that's really good for the short term, and you can make a lot of money off Fubo in those cases. But either way I look at it, the stock is undervalued, and it's going to do well once the market conditions really come back and start to favor more of these high growth companies. And let's think down the line a little bit. 3, 6, 9 months from now, the markets are going to be freaking out about a recession. And what kind of stocks do good when the economy slows down, when the economy goes into a recession? Well, it's stocks that are growing 100%. I don't think a cable alternative, entertainment, is going to go away anytime soon. Even if a recession comes, I still think people are going to sit on the couch in their beds and watch TV, watch sports events. I don't think that's going away. Let me know your thoughts on this down below in the comment section. But I think it could be a really good investment. Now, what would I really expect out of this company in the next couple of years? Well, I think it's very possible this thing year end, if growth starts to get bought up as recession fears start to come later in this year, I think this thing could possibly go to $15 to $20 per share again. Or if it gets bought out, I think it could be bought out in between $15 and $20 per share. That would be a 2-3x on your money. Now, this stock could also drop another 50% from here. It could surely go to $3 per share if the markets do start to crash, or it becomes, not favorable even more to a lot of these stocks that have been beaten down a lot. But looks like a really good opportunity to me. I did buy 159.77 shares, 2.47% of my portfolio is now in Fubo, and a market value of about $937, down about 1% right now, 0.73%. But I also did buy an option for increased leverage on this position, and I did buy a Fubo $3 call expiring January 19th, 2020. And I did this because it's cheap. It was only, $385 to get this option, and the break even is like $6.90 per share. So if this stock did get bought out at 10, 15, 20, it's going to make a lot of money. Or if the stock just does its thing and goes up past $6.90 by the end of this year, it's going to make money as well. And that is obviously above $6.90 going to be like I own an additional 100 shares of Fubo. So that's my thoughts. I do plan to add to this position, especially if it does go down. But as far as the Ortex data, you're looking at 25.26% short interest of free flow, 36.65 million shares that are sold short, cost to borrow max 2.68%, utilization of 63.32%, days to cover at 2.37. So it is a short squeeze candidate, but I don't know when that will happen. Shorts obviously have to cover, but it could be a little bit of time. There's really no pressure on this trade because I think you're just getting it under its fundamental valuation. Anything else is definitely going to be an additive benefit. So that's really my thoughts on Fubo, and that's really what you guys need to know. The option activity from institutional investors, extremely bearish, extremely bearish. All of these options are puts. Literally a 0% positive order value for the day. 13 orders totaling $1.81 billion. Positive order value of 5% for the week. And a lot of these orders are quite big. $200,000 orders back to back to back to back. And usually when institutional investors are this bearish on a stock, it's usually a good time to buy. It really shows a lot of negative sentiment. And you can see that from the share price. I mean, it's pretty much been straight down. So, that's basically what I have for this video. There hasn't been too many buys or sells as of recently. Some people did sell out here on the 30s, which I would have done that anyways. The fact they're not selling out any other time besides these peaks, I would take that as a good sign. If they were selling out in the 5s, 6, 7, 8, 9, 10, wouldn't be a good sign. But if you want to call the top, sell some shares, Nothing wrong with that in my personal opinion, especially when it was $30 per share. That was way overstretched, and everybody knew that. So that's basically all as far as Fubo. That's all there really is to talk about there. Let me know your thoughts on that down below in the comment section. Do you know anybody that uses Fubo? Do you have it? What do you think about the service? Let me know all that information. As far as the 3 reasons to buy AMC stock. Number 1, AMC's financials are in great shape. In March, AMC's management announced that the company had enjoyed the best quarter of the last 2 years, and although the nearly 60 million moviegoers who bought tickets represented only 64% of pre-pandemic levels, the fourth quarter indicated it's only a matter of time before ticket sales are back to normal. On a year-over-year basis, revenue increased 620% in Q4. Drink and food revenue reached 87% of pre-pandemic levels to an average of $6.38 per patron. That's quite a bit better than $4.74 per person AMC made in the fourth quarter of 2019. But perhaps the best news was that AMC achieved positive earnings before interest, taxes, depreciation, and amortization, as well as positive operating cash flow. Thanks to the effect of the COVID-19 pandemic on the movie theater business, AMC's balance sheet had been a big concern, and obviously not quite a big concern anymore that they are operating at a with a positive cash flow. So that's definitely good. But second, AMC's management has a long-term growth plan. CEO Adam Aron has a plan to generate long-term value for AMC and its shareholders. His goal is to match AMC's high valuation with its company's fundamentals. Number 1, by investing in the infrastructure of its core business, the movie theaters. 2, paying down company debt. 3, investing in mergers and acquisitions with a view to the company's future growth. And like we've seen many times, virtually on every single earnings report, Adam Aron says in the next couple of years, you're not going to think of AMC as only the traditional movie theater company. You're going to think of it as much more. And I tend to think so, especially after their investments that they have made in Highcroft and these planned investments that they have going into the future, which are also going to be great catalysts as well. Now, 3, AMC has meme stock power. The so-called smart money has criticized the meme frenzy that kicked off in early 2021, but more than a year later, this trend still continues and has wreaked havoc on hedge funds that have bet against AMC stock. Meme stock investing is characterized by retail investors betting on stocks not due to their business fundamentals, but instead of defeating short sellers. AMC has been one of the meme darlings and has remained popular on Reddit's meme stock trading threads. Thanks to meme investors, AMC stock has returned an incredible 1,060% since the beginning of the year. Their unwavering buy and hold optimism and demand for the stock have essentially rendered AMC's business fundamentals irrelevant. Currently, short interest in AMC is rising more than 20% of the stock's float, according to the latest data from Yahoo Finance. So there's a good chance that meme investors could provoke a new short squeeze and send AMC stock back to stratospheric levels. Interesting. If you guys want to read the whole article, I will also link that down below in the description. I do think there's a lot of value out of that. The business is doing well, and I think people forget that even when AMC stock goes parabolic, right? Sees a big ass rally and then comes straight back down. People forget that there's actually a business here that is doing better and better, and that is going to be a tailwind for us. It's going to be pushing us ahead into the future and helping to drive some of the price action to the upside. So that is going to be all for this video. Let me know your thoughts on Fubo. Let me know your thoughts on this video. Hit the like button, subscribe to the channel, comment down below, join us on the live stream 10 to 11 p.m. Eastern Standard Time tonight, and every other night there is futures or trading the next day. We are in there like swimwear, ready to answer questions, go over news, go over futures, go over things that are going to affect the markets or tickers or text data, whatever you guys want to talk about. That's what we are on there for. Sometimes we do talk about food as well, so if you're hungry, maybe stay away when the food talk does start. But nonetheless, thank you guys for watching, and I will see you in the next one.